Hello everyone, this is Dan Gramza, and welcome to Gramza Market Studies for Monday, November 23rd. Hope you had a wonderful weekend. Also, I want to thank everyone who came up to me at the expo in Las Vegas on Friday to say hi. I appreciate that. Nice to meet a lot of new people and also to see some faces that I've seen before. It's great to see you again. The NASDAQ market, I want to talk about that. One of the things that I failed to do was to move that sell point up to the level that I had discussed in these videos, in the advanced session primarily, but that was at 1770. That was actually taken out on Thursday, and I forgot to mention it. So the difference between this buy point and that sell point, that is 84 ticks or $1,620 per contract. So what are we expecting for today's action? This setup, even though this would create a short position, I think is bullish. We're looking for the possibility of this market pushing to the upside. So for short, we want to be cautious about that short position. Now, if we see that kind of behavior here, what does that say about the dollar? Let's take a look at those currencies. And then basically the Swissy and the Euro, if you look at the Euro here and the Swissy here, on Friday these markets did move lower. They did reach magnitude objectives again, but they got low enough to find buyers. And I think this possibility for finding continuation of these buyers is going to be the issue. In other words, this shadow that you see here, can these buyers that created that shadow continue the next session? And that's what we're looking for. This is more bullish than it is bearish. So I think it's a very interesting setup. In the Japanese yen, we're seeing a market struggling at that 1250 level. That's a big deal for it. And right now, that's the challenge that it's not meeting. But we see in the Aussie dollar low enough again to find buyers. We're looking for a possibility of that market rotating up. British pound looking for continued weakness. Although if it gets back up above that 65, 75, that could be interesting. And for the Canadian dollar, this is a resource economy that did stay weak going into Friday's close. So interesting across the board, a little bit of different rhythms in these different markets. I find that fascinating. And let's move over to the interest rates. Short end of the curve, continued expected strength. That's what we're looking for. We're seeing this market very orderly. Nothing telling us to stand aside there. The notes and the bonds, they're still struggling. It's very similar to what the yen is doing. Only here it's at 1924. We're seeing sellers. We're finding buyers below 16. Like as we mentioned before, it's a tug of war here. It's a neutral stance. This is as bearish as it is bullish. I think the longer term bias though is for a push to the upside because of these benchmark candles that we see there. In the metals markets, well, it continues. The behavior that we saw a few days ago, that we said that, I mentioned the shadows both sides, what I call containment shadows, could set up a potential sideways market. And that's really what we're seeing. But a sideways market that if we have to pick a bias, it would be for a push back to the upside. Also in copper, it got through that sell point at 306. And that means that difference in that particular market between this buy point and that sell point would be $2,000 per contract. So that would be the dollar value if someone was long this position here and sold it here at that sell point. And I'm still thinking that this is a push to the upside. Just like I do with the gold and silver, we are in a sideways type of accumulation phase. It is waiting for an excuse, and I think the bias is to the upside. Now, crude oil. Now, we're looking at the Jan contract, by the way. And what we're seeing here is that typical range-bound type market as well. We have a few of these, don't we? We're just basically between 77 or 76, if you want to use that, to $81. This market also needs an excuse, and fundamentally, there's not a real strong reason to support a huge move here. The only thing I think you can kind of factor in here is the currency issue, and that is the cost of, or the value of crude oil in terms of US dollars. Now, natural gas, well, they're at it again. These buyers did give us a little bit of follow through, and that's going to be the key for today's session. We got a benchmark candle overshadowing this, and we need to get up and get going if we truly are going to see a rally in this market. It sure wants to give us a a good try at it, that's for sure. Now, when it comes to the grains, we saw beans give us a little push right back up here. We are looking for unchanged to higher in that market, but you can see 1050 is a fairly significant number in that market. I think corn, same issue. We're looking for a push back up. This is more bullish than it is bearish. Now, I said that going into Friday. So let's recap that. On Friday, I was looking for an up move that day. Did not happen, though. So it's maintaining that sell side to the market, but I'd be very cautious about being too aggressive on the short side for that market. And the same thing for wheat. This is a market that's behaving like it's accumulating, getting ready for a push back to the upside. Well, this concludes today's market studies. Hope you found a few ideas helpful. I'm looking forward to being with you again tomorrow. And in the meantime, take care.